Welcome on board our guests for the day, and we have G. Chokkalingam, the founder and head of research, economics research, joining us on board to address viewer queries. And along with him, for the technical view, we also have Akshay, Bhagwat, the senior vice president derivatives research at JM Financial Services, joining us. Good morning to both you, gentlemen. Before we kickstart the queries, viewers, remember, keep writing to us with your stock-related queries on the number that will be flashing on your screen soon. Remember to mention the stock name, the buy price, your question, what kind of guidance are you looking for when it comes to this stock, how many of the stock do you hold, or if you don't hold the stock and if you're looking to buy the stock, then also please provide us with the exact name of the stock and the time frame, the time horizon that you are planning to hold the stock for. That's the number you can send all your queries to, and we'll be addressing all of them shortly over the course of the next 1 hour. But let's kickstart this edition of Buy Now, Sell Now. And before we come to viewer queries, Akshay, I want to get your view on Reliance, right? Because we've seen quite the volatility coming in on this nifty major. And today there is a upbeat brokerage note coming in. On the back of that, Reliance is holding up well. What are the charts indicating? Because we've seen quite the correction coming in. Do you believe that now this is a sign of reversal and now it's a one-way up for Reliance, or still some time for slowdown on this stock?
Good morning. So for Reliance Industries, on the price chart perspective, it's heavily oversold, and the last couple of trading session has seen a relief rally pullback. Now it's in a support, a base in the building, and 1150, 1160 is the possible support which the stock is building up for the March month. Now, from a trading perspective, there is a slight resistance at 1200 to 1210 zone, and once it crosses this zone, you can expect a strong round of momentum uptick. Today, there's some brokerage note which is helping the stock to trade positively. So if you're buying Reliance, yes, it's a buy for me, but give it some time, probably 10 to 15 days of time. Holding period will give more justice, because overall I believe the support is in the making, but eventually there is a reversal which is building up, which in case can see the stock moving up for levels of 1270 in the month of March. So it's a buy with a stop loss below 1140 for me.
That's a buy call coming in from Akshay. But on that note, let's begin all our viewer queries. And Mr. Chokkalingam, I'm going to come to you first. And we have our viewer who's writing to us. Satya Veni is writing to us from Hyderabad. A long-term investor has purchased BEL shares. He holds 2,050 shares at a buy price of 319. And the second stock in question is PFC. He holds 600 at 551 rupees per share. He's asking if we should continue to hold, exit, or average, and if so, at what price? What's your view on both PFC as well as BEL?
PFC, I looked at the fundamentals. In terms of price to book value, it is very attractive. One can even buy for long term. And BEL, even after a major fall, it is still stretched in valuation. So I would give hold the recommendation on BEL for the long term investors.
And that's the take coming in as far as PFC and BEL are concerned. Tell you what, let's also continue taking all of the queries that are pouring in, and there's lots of them. The next one that we actually have coming in, Akshay, is coming in from Venkat Rao, who's writing to us from Visakhapatnam, wants to know about Canara Bank at this point. What do you think about this one? Because 300 shares at a buy price of 119 rupees.
On the technical front, again, this PSU bank is trading at a very vital support of 80. And looking at the broader setup, it's been, I think, 5-6 months of one-way fall, and somewhere sanity would return back around the levels of 80-85, where you can see, despite buying in the stock, the respite or the pullback rally can see the stock heading for levels of 100 odd levels. But from an investment perspective, since you have bought it at higher levels, I think this is going to take a long time to get back to levels of 120 plus. So yes, from an investment perspective, it's still a hold. From a trading perspective, the best case from a pullback scenario is probably till around 100 to 110.
Okay, so that's the view coming in on Canara Bank. Let's move on. And Mr. Chokkalingam, our viewer John is writing to us from Chennai. He's saying he's a long-term investor. He wants to know if he can make a fresh entry into Dr. Reddy's at current levels in the context of their large exposure to the US. So it's a slightly fundamental query coming in, which is why you're the perfect person to answer this. And what's your view on Dr. Reddy's? And also his specific query is on their exposure to the US market right now. Of course, with everything that we're seeing in terms of the tariff war on Trump's behalf, what's the view coming in on Dr. Reddy's right now?
Yeah, he is absolutely right. It has got a very huge exposure to American market, partly already reflected in the price. One is not very clear, ultimately what is going to happen to Indian pharma industries from tariff war. And at the same time, it also got a substantial domestic business and stock also corrected a lot. So we do have a buy call. We would maintain buy call for long term. And if wants to have fresh investments, we also have a FDC limited buy recommendation, which has got 82% exposure to domestic business. So it won't be impacted at all by US trade war. So we have, we consider FDC limited as a very high conviction stock in our coverage as compared to Dr. Reddy. But however, we maintain both buy recommendations.
Coming in as far as Dr. Reddy's Labs is concerned, but tell you what, it's time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related questions.
Hi there viewers, welcome back to Buy Now Sell Now. Time now to keep it going with all your viewer queries, and let's get a fundamental and technical view both is what our viewer Partha, who's a senior citizen from Kolkata, is requesting. The stock in focus is Tata Chemicals, and he wants both your views coming in, Mr. Chokkalingam as well as Akshay. He holds 100 shares at a buy price of 965 and wants to understand what to do with this stock. He's been holding it for the last 18 months or so and wants to know the prospect for the next 12 to 18 months. What's the fundamental as well as technical view coming in on Tata Chemicals?
One can hold, need not book losses. Around 950 could be the fair price because the stock has already corrected. But I am not overly bullish on the stock because the chemical industry is still going through a difficult time. I don't think, next 1 or 2 quarters, the business of Tata Chemicals is going to do very well. So I would give a hold recommendation with a target of around 950.
That's the fundamental view coming in as far as Tata Chemicals is concerned. Tell you what, Akshay, I'll come right back to you. What do you think about this counter?
Well, technically, since the viewer is holding this from a pretty long time, the support zone which you need to look at is 775 to 750. Now, recently you have had a pullback scenario from the support zones. These levels were tested way back in 2022, and from there you had a recovery all the way to 1100. So it's a very vital support. The stock has recovered again. It may take some more time to get back to levels of 1000 or 1000 plus, but from a long-term investment perspective, continue to hold. From a risk reward perspective, your stop loss should be around 720 on this buy and hold position.
All right, and that's the take coming in as far as Tata Chemicals is concerned. Tell you what, the next one that we actually have is coming in from our investor who's writing to us about Garden Reach, Mr. Chokkalingam, 120 shares, buy price is 2,080 rupees. What do you think the strategy should be? Because Tina wants to know what she should do about this counter.
Even after the massive crash, the valuation is still stretched. There is no doubt about it. So one can hold it. In case it rises around anywhere in the range of 5 to 10%, one can sell. That is probably around 1450, 1500 would be a fair price for Garden Reach.
Okay, so that's the view coming in on Garden Reach. Akshay, coming to you, our viewer Shaurya is writing to us, and in fact the questions that he has asked, the stocks that he had asked about, we have 2 to 3 other viewers who have also right now written to us about these stocks. He's looking to make a fresh entry in one of these stocks, and he's asking if Tata Motors or Ashok Leyland, which would be better out of the two to do so, because it's not only him, it's a couple of queries that we've got on exactly 2 of these stocks. So, it's quite interesting to ask you this query, Tata Motors or Ashok Leyland, what is looking good right now?
Honestly, both the chart structures are good. Now, first, Ashok Leyland, that's the better one if I were to compare both the stocks. The reason being that in the last 4-5 months, in the rough patch which the market and the auto pack had, this stock has somewhere held its strong support base of 200. Now, it's the time that the momentum gets back in Ashok Leyland. So right now, it's in a process where the stock is in an accumulation stage. 200 is a massive support. Short term, the range is 200 to 235. and your positional or the long-term momentum kicks off once the stock crosses 235, in which all likelihood it should. So Ashok Leyland is my preferred pick, expecting targets of 275, 280 from a 1-year horizon, stop loss 195. And Tata Motors is more from a bottom fishing perspective, because last 6 to 7 months have been pretty bad one-way sell-off, but somewhere 600 is a level which is highly oversold and very much prone to a recovery rally. So from a short-term recovery perspective, Tata Motors can target around 690 to 700. Ashok Leyland is a buy and hold from a slightly longer-term perspective.
All right, and that's the take coming in. As far as both of those counters are concerned, tell you what, the next one that is coming in from Satya, who's writing to us about Scient. He wants a combination view when it comes to this counter. He wants to know if this is a good time to buy into this counter. Mr. Chokkalingam, I'll come to you first. What do you think is the outlook when it comes to the next 1 to 2 years when it comes to Scient?
Definitely, it's a buy recommendation. In fact, we have a coverage on Scient Limited. It has already proven, starting a subsidiary and unlocking value through Scient DLM. Recently, they started 100% subsidiary, which is focused on semiconductors. Stock also crashed a lot. Post that, Scient looks very attractive.
Okay, Scient looking attractive on the fundamentals. On the technicals, Akshay, what's the view coming in on Scient?
Yeah, also on the technical charts, from a monthly chart which I'm looking at, there is a very strong support at the levels of 1150, 1190, from where recently you have seen a recovery. That's more of a trend line support. And really from a longer term investment perspective, if you have bought, then the recommendation is to hold. It's not going to be a V-shaped recovery. The process might be slow considering the sell-off which you had, but from the current level, it makes a lot of sense to continue to hold, expecting targets of 1800 in 6 to 8 months time frame.
That's the take coming in when it comes to Scient on both a technical as well as a fundamental perspective. But the next one we have, Mr. Chokkalingam, is coming in specially for you from SK Saran, writing to us from Bengaluru, wants to know what you think about Bank of Maharashtra for the long term.
Certainly, we have a buy recommendation. According to me, in the banking space, Bank of Maharashtra is the best stock to consider. Because lowest NPA, there are only 1 or 2 banks have this kind of outstanding net NPA, which is around 0.2%. And secondly, the bank is consistently growing. Even when growth slowed down in the banking industry, it has posted a strong double-digit growth in business as well as in profit in the latest quarter. And after the steep correction, the stock also trades at attractive valuation of around 1.4 times price to adjusted book value on 1 year forward earning. So according to me, this is one of the best stocks to invest in small and mid cap space.
Positive outlook and bullish view coming in on Bank of Maharashtra. But Mr. Chokkalingam, I'm going to come back to you because the next query is slightly funny in nature. The stock in question is it's Tata Motors. While we've spoken about this stock, our viewers asking us that the IPL season is just underway. It's going to be coming very soon and it's just around the corner. It's Nikhil Sharma from Mumbai who's writing to us, 23 years old, is an intraday trader and a short and a long-term trader as well. He's holding 20 shares of Tata Motors at a buy price of 716.8 rupees per share. And he's asking, since Tata is the sponsor of Tata IPL, would that make any difference to the stock? What's your view here?
On Tata Motor, I have a negative view because if you look at the performance, the recent time, it is not able to beat other domestic players. And if you look at, sales of automobiles, for the last 2-3 months, it's not able to beat other players like M&M. So commercial vehicle also is into difficult time as an industry. And therefore, I would prefer Mahindra and Mahindra to Tata Motors.
That's the take coming in as far as Tata Motors then is concerned. Tell you what, in real estate news, all right then, welcome back. Thank you so much for staying tuned in. Let's continue taking all of your stock related queries. The next one that we actually have is coming in from Mr. Chokkalingam. We have Sunil G who's writing to us. He wants to know what your picks are in terms of the medium to long term in the current market setup where we've seen a lot of volatility come in.
I firmly believe, I may be wrong, I firmly believe that by end of this month, the market should bottom out. US tariff war cannot go on forever. Very interesting data point, which is not highlighted properly, is that there are reports of small businesses which account for 50% of employment. They are already facing the difficulties in US due to the trade war. So in a couple of months or 1 or 2 quarters, that would fade. That's my strong view. And Indian market, nothing to worry much about it, because our trade surplus with the US is not at all comparable with what China is generating. Therefore, I firmly believe the market would bottom out by March, and this is the ideal time till March and to buy. So I would highlight some of the stocks we have recommended. We have active coverage. One is, as I already mentioned, Bank of Maharashtra. And second stock is Sterling Tools. Recently, we have recommended. And third, FDC Limited. 82% of the business is all domestic. So these are the three stocks I would suggest. I have picked up all these three stocks because they depend on domestic companies, domestic business. Nothing do much with dollar exchange rate or US economy. So these are the three stocks we have covered, and I am extremely optimistic on these three stocks.
Bunch of stocks that Mr. Chokkalingam is liking right now. And Akshay, coming to you, our next query is coming in from our viewer Shiv Kumar from Bangalore, who's writing to us. He holds 15 shares of M&M at a price of 2719. He's asking what should he do next? Should he continue to hold or should he average it? And it's just at the current value, it's just around the current price of the stock, so it's not like he's sitting on a very big loss right now. But over the course of the last 1 month, this stock is lower by 14%, Akshay, of course on the back of the Tesla news and everything that was affecting the stock fundamentally. But technically, what's the view on this stock, and do you believe this 14% correction has been good enough and merits a relook at this stock now?
Yes, from a price reading perspective, if you pull up the charts right from 2024, time and again, the levels of 2600 has been respected. There has been, I think, 4 to 5 successful bounce back scenarios from the level of 2600, which has seen the stock heading all the way till 3100, 3200. So definitely the recent bounce also, which we have seen a couple of days back, comes from the value area of 2600. It's a very strong technical support. The longer term chart setup is strong, and the belief is you need to hold. You are also, if you're open to averaging, you can average this. You can keep a stop loss of 2475 and expect a trading pullback till 3000 or 3050.
And that's a take coming in as far as M&M is concerned. The next one that we actually have is coming in on Texmaco Rail, Mr. Chokkalingam, because we have Snigdha writing to us, wants to know your take because she has 250 shares, bought at a buy price of just about 270 rupees. What do you make of this one?
Yeah. Unfortunately, even post-crash valuation looks a little stretched. And also, we all know the budget has not hiked much the capex for railways. So, but however, since the stock has fallen a lot, I would give hold recommendation. Probably at least 10-15% it should recover tactically, because tactically the stock is liked by a lot of investors. So any good news, it can recover even 10-15%, and that should be an opportunity to sell the stock.
Hold, wait for a 10 to 15% uptick and then sell the stock. It's the view coming in from Mr. Chokkalingam on Texmaco. But Mr. Chokkalingam, I'm going to come back to you because this next query is also for you. Our viewer Gyan Jain is writing to us and he's asking Kalpataru or KC International at the current level, which would be a better pick to buy into right now?
Sorry, these two I have not studied in the recent times, so I may go wrong.
No problem. Akshay, do you have any coverage on Kalpataru projects or KEC? What are their charts looking like?
See, Kalpataru looks weak on the price charts. A similar case for KEC. So even if you're buying, it's more of a trading pullback move you can look forward to. If a comparison is to be made, I think KEC International is better placed over Kalpataru. 726 is where the current market price is. And from a short-term trading perspective, if you're keen, you can expect a pullback rally till 780. You can keep a stop loss of 645 on this buy trade at the current market price.
Alright, and that's the take coming in as far as KAC and Kalpataru projects are concerned. But the next one that we have is coming in from Venkata Pavan, who's writing to us from Bengaluru, Mr. Chokkalingam. He's a long-term investor and he's asked about a couple of counters actually, LIC Housing Finance, buy price is 825 rupees, currently sitting at a 20% loss when it comes to this counter. And even when it comes to Kansai Nerolac, he's sitting at a 45% loss, invested at a buy price of 400 rupees thereabout. What do you think about both of these counters?
Yeah, paint industry is into deep trouble. There is a industry slowdown and there is a huge competition. The new two large players, the capacity addition is estimated to be 50% of the existing capacity. So one can hold it, because the market itself is at rock bottom now. So tactically, when the market recovers, almost every stock should see some recovery. So one can hold it in the short term. And the other stock, what is the other second stock?
Two stocks that he's asked about is Kansai Nerolac and LIC Housing Finance.
Yeah. So LIC Housing, I would prefer PNB Housing to LIC Housing. I find PNB Housing, doing consistently far superior. So in housing finance space, I would prefer PNB Housing.
So that's the take coming in on Nerolac as well as LIC Housing Finance. Better options available elsewhere in the market is the view coming in. But Akshay, coming to you, our viewer Subramaniam is writing to us from Chennai and he's asking what is the long-term target for Shriram Finance. He holds 25 shares at 615 rupees, which was bought 6 months ago. So if you could help us with a 3 to 5 year target on the charts, what's the stock looking like in the future? Is it looking bright for this one?
Well, this has been one of the most strongest chart setup in the recent times. 500 has turned out to be a very good support point. Really, from a longer term perspective, the price structure is very strong. And if I were to project a rough target estimate, 3 to 5 years will be too long on the technical price chart. But I think from a 1 or 1.5 year perspective, you can look forward to targets of around 825 to 850. So this is the best I can give. 825 to 850 is what you can look forward to. Support of 500. Buy and hold is the strategy for Shriram Finance.
That's a take coming in as far as that particular counter is concerned. The next one is coming in on Polycab because we do have Jayesh who's writing to us from Mumbai, Mr. Chokkalingam. He's bought 34 shares. Buy price was 5,300 rupees and he's invested in it for the long term. Wants to know if he can actually increase his holding at the current market price.
Yeah, one can definitely add. Of course, I have seen the competition is getting intensified, but then it is already reflected in the price. So one can buy Polycab.
Okay, so buy Polycab is the view coming in. It's a bullish view coming in from Mr. Chokkalingam. Akshay, coming back to you, our viewer, Mr. Krishna is writing to us from Chennai. He's asking if it's a good time to make a good entry, a fresh entry into Cochin shipyard at the current levels. What's the view?
Cochin shipyard, see, technically the price structure is still weak. It is just that the markets and most of the stocks are so heavily oversold that you are going to have a trading pullback scenario. But really, there is no support in building up for Cochin shipyard. No evidence in the price chart yet that a strong support is in formation. So I would give this a miss. Might as well. There is a strong probability, looking at the current chart structure, that the stock may visit the lower end of 1150 to 1185. So I would give this a miss as the current chart trading goes.
Give this a miss as far as Cochin shipyard is concerned. The next one that we actually have is coming in from Ravi Kumar, writing to us from Chennai. Mr. Chokkalingam wants to know about Tube Investments. Good time to buy?
After a severe fall, also still the valuation is stretched. So in case it falls another 10% only, I would consider buying Tube Investments.
Okay, so that's the take on Tube Investments, and let's move on. And our viewer Krishna is writing to us once again, Mr. Yes, that's a question coming in from a viewer, Mr. Krishna. Akshay, it's for you. He's asking, is it worthy of holding or buying Bajaj Finance right now? You know, we've seen quite the cut coming in after that NBFC norm has come in from the RBI yesterday, that there is no extension on credit lines or renewals for the same. So on the fundamentals, that stock was looking a little weak yesterday. Also, that stock was trading with cuts of about 4 or 5%. But going ahead, do you believe that there is merit on the charts for this one?
Absolutely. If you look at the price structure of Bajaj Finance, I think after 2022, that's around three and a half years, we have seen a strong breakout which matured at the levels of 7,600. So technically, that's a very strong bullish development on the price chart of Bajaj Finance, which gives you a target of around 9,300 to 9,500 from a medium to long term perspective. So it's a hold for me, irrespective of recently the news, which has kind of been more of a spoiler for the stock. up, but I think the stock should recover soon and head for targets of 9,000 plus.
All right, then that's a take coming in as far as Bajaj Finance is concerned. Time for a very quick breather in the show. When we come back, we'll continue taking all of your stock-related queries. Don't go anywhere. All of your stock-related queries. The next one that we actually have, Mr. Chokkalingam, is coming in from Girish Iyer, who's writing to us from Trivandrum, wants to know about three stocks. In fact, 5,000 shares of Avanti Feeds is what he's holding on to. Buy price is 735 rupees. And when it comes to Zensar Tech as well, 2,000 shares, buy price is 785 rupees. And even SBI, 2,000 shares, 765 rupees is the buy price. So three stocks there, Avanti Feeds, Zensar Tech and SBI.
Zensar post correction looks a little attractive, one can hold. And SBI, I believe this steep fall is a great opportunity, because among all the sectors, if you look at which are part of Sensex or Nifty, there are very few sectors which are growing in double digit, which is one of them is the banking industry. And SBI is one of the preferred stocks in the large cap. And Avanti Feed, I would maintain sell call on Avanti Feed, but buy call on SBI and Zensar.
Buy on Zensar and SBI, but sell on Avanti Feeds. Mr. Iyer, we hope that answers your query. Akshay, coming to you, our viewer Mr. Karthikeyan is writing to us from Kerala, and he's asking for technical advice on buying TVS Motor for the long term. What kind of visibility do you have on the chart when it comes to TVS Motor, and what is the next target that you are spotting for this stock?
Well, for TVS Motors, from a longer term perspective, I believe the recent last 3 months have been more of a short to medium term correction phase. And right now, as I see, somewhere 2,200 is the short term support, which may or may not hold from a short to medium term perspective. But definitely, since your question is more long term, 2,000 can be the possible base area. So even if there is one more low in the stock going ahead, there is no need to panic. You can continue to hold. The longer term charts are still positive, and with 1 year plus investment horizon, you can look forward to targets of 2,900 to 3,200 in this stock.
All right, and that's a take coming in as far as that particular counter is concerned. The next one that we actually have, Mr. Chokkalingam, is coming in from Parag, who's writing to us from Mumbai. Wants to know about the 25 shares of HAL that he's holding on to. Buy price was 4,300 rupees thereabout. What is your outlook when it comes to this one? Should he average at this point?
One can hold it. Of course, the price fall is so steep, one can buy it also. But because I believe HAL can post a steady growth in the next 2 to 3 years, steep fall is an opportunity. So I would give a buy call on HAL.
Buy call coming in on HAL, but unfortunately, that's all the queries that we could squeeze in today's show. But viewers, keep writing to us on the number that will be flashing on the top of your screen, and we'll keep taking the queries with all our guests, continuing tomorrow and over the course of next week. But on that note, Akshay and Mr. Chokkalingam, thank you so much for joining us. We'll wrap it up on this edition of Buy Now, Sell Now, but stay tuned to ET Now, because Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.